I think we can get started, Pratik, if you'd like. Um,
Yeah, we can start.
yeah, okay, perfect. All righty, good deal. All righty, so hi everybody. My name is Jesse Frugier. I'm the VP of Product Management here at Algebrik AI, and we're at our second quarterly webinar. It's kind of hard to believe that we had a webinar a quarter ago because time just goes by so quickly. But here we are, and we're going to be talking about some pretty specific topics whenever it comes to loan origination and the credit union movement, which is the use of AI, and specifically generative AI versus agentic AI and why it matters for loan origination. We'll dive into everything as we go along our presentation today. Quickly, though, I'd like to mention, we'll get some more introductions here in a little bit once we do our group conversation, but some of our attendees that show on your screen here is Travis Bao. He's the CEO of the University of Hawaii Credit Union. Sherri Woo, who is our CTO of the University of Michigan Credit Union. And then Shirley Sin, who is our Chief Community Development Officer at New Orleans Firefighters Federal Credit Union. Everybody that we have on our panel today, they are experts in the usage of UI, or AI, excuse me, and I think that you guys are going to get some good information from this. So, another person that you see here is Jennifer Hernandez, who is Algebrik's VP of Customer Success. So we recently hired her. I can go on and on about how great she is, but I think that it'll be more effective for her to do that. So, Jen, do you want to introduce yourself to everybody?
Yeah, hi, I'm Jennifer Hernandez, and I, as Jesse said, am the newbie on the team. I've been here just under 2 months, but my background is all credit unions, so I'll kind of give you a little bit of background. So I started as a teller when I was 17 in the credit union space. That's how long I've been in it. I was at a credit union called 1AZ Credit Union in Phoenix, Arizona, which is where I'm based, and I quickly worked my way into lending, fell in love with it. That's my passion, and I just stayed there for 21 years. So from there, I went ahead and took a step back and decided I wanted to grow my resume a bit. So I went to a smaller credit union, which is about 250 million in assets. Walked right into my third core conversion. I don't recommend doing that many, but it was another opportunity for me to get my hands wet in the weeds with the team. So I was able to oversee lending and collections there. I've been on two LOS platforms. The recent one I was on was MeridianLink. So I was also the LOS system administrator. So as I realized with little credit unions, you wear a ton of hats. So it was actually fun to get into the weeds with the team over there. From there, I took a journey to a fintech space called Upgrade. I was hired on to do some various lending type roles there, but I actually created a position for myself in the financial institutional partnerships where I was the one reaching out to my friends in the credit union space, setting up meetings for us to discuss loan purchase programs to help them with their balance sheets. So I did that for a bit. And then more recently, I was at Experian for about 4 years. I was the client executive for credit unions in Nevada, Arizona, Washington, and a couple Alaska ones. And so my role there was really to find solutions that help make their life easier. So it could be anywhere from a credit report to a score to a custom model, even to their decisioning. Experian does have a decisioning tool as well. So I was able to do that for a bit and then came over to Algebrik. And what I will say is just from my background and being on other LOS platforms, what we have is amazing. And what we have is everything I would have wanted out of an LOS system that I couldn't get either because it wasn't offered or we just couldn't afford it as a credit union. So that's a little bit about me. I'm super excited for our webinar. Thank you guys for attending.
Yes. Alrighty. Thanks, Jen. Okay, so what we're going to do is we're going to move on here to our next slide, and we're going to start everything with a poll question. And we want to kind of gauge everybody's understanding of generative AI and agentic AI. So let's show our poll here, if we could, which are we going to be able to pull up the poll there? Yeah, here we go.
There we
Perfect.
go.
Okay. So it's going to be right there, front and center for you guys. So when you hear agentic AI in the context of lending, which statement best matches your current perspective? I've heard of the term. I understand it conceptually. I've seen or read examples. And we're actively exploring or implementing agentic AI. And as we're going to dive into here, there are some big differences between generative AI and agentic AI. Mainly, agentic AI has initiative; it has the ability to act on your behalf, whereas generative AI really just kind of produces outputs based on input. So I'm curious as to our poll results. Um, do we have those? 62%. Okay, excellent. So we don't have any folks that are actively using it. We've got some people with some understandings of varying levels, and that is pretty consistent, I would say, across the board. So I'm going to go into some opening remarks here, and then we'll get into our panel discussion where we'll introduce our panelists a little more in depth. But artificial intelligence is ever evolving. Like other quickly growing industries and technologies, lots of new terms emerge. And in our webinar today, we're going to concentrate on a couple of them, which is agentic AI versus generative AI, or generative AI versus agentic AI. Agentic AI has become more popular recently. However, misconceptions cause these two to be used or mentioned interchangeably. In reality, they represent very different paradigms. They offer different capabilities, and they will change the way that we work and interact with machines in the future. Make no mistake about it, agentic AI is the future, and this is where true automation is going to come from. And I want y'all to wrap y'all's head around this for a second. So think about this. Currently, there are double the amount of people that are adopting the use of AI compared to adopting the use of the internet whenever it first started to become popular. And I don't know about y'all, but I've heard of that there internet before, and I'm pretty sure that it's a widely used thing. So that's pretty astonishing to think about that double the amount of people are adopting AI. The credit union industry can greatly benefit from the use of really both forms of AI, but agentic AI puts us in front of a younger consumer base. It puts us in front of them without having to physically be there. It also gives your staff the ability to do what they do best, which is provide member service. Providing great member service is much better than pushing paper or buttons in a UI. In order for us to effectively use these versions of AI, we need to understand them effectively. So let's start with a term that we're more familiar with over the past few years, which is generative AI. Generative AI refers to models that can generate new content. Gen AI relies on using machine learning called deep learning models. And basically, these are algorithms that simulate the learning and decision-making process of the human brain. These systems analyze massive data sets, they learn patterns, create outputs. But what's worthy to note is that the input has to come from the user, us. The best example of this is ChatGPT. Basically, the human gives the prompt, the AI does its thing. Generative AI is powerful, but it's worthy to note that it is reactive in nature. It does not initiate goals. It doesn't plan across time. It doesn't act on your behalf unless it's coded to do so, and it does need instruction from the user. Excuse me. So, what's agentic AI? Agentic AI is the new kid on the block. Um, Agentic AI refers to AI systems that can autonomously pursue goals. And the autonomous word is very important whenever we're thinking about agentic AI because it has agency to move and act on its own behalf. They can plan, decide, act without being prompted at each stage. In essence, they are AI agents. You can give it an objective. The AI agent handles the subtask within the overall objective. And that can be broken down into thousands of AI agents and subtasks if needed. This manages, so now what we're going to do is we're going to talk about model context protocol. This isn't anything necessarily that we in the credit union need to know about from a functionality standpoint, but it does manage the complexity of a task. Basically, it defines the sequence of events that must occur for the task to be completed. So it kind of acts like an orchestrator, I guess you can say. Agentic AI is designed to operate more independently. It continuously learns by analyzing huge amounts of data sets. It consists of autonomous systems, and basically there's a mix of AI techniques that can be used, such as natural language processing, machine learning, even vision technology. Those are things that we use here at Algebrik within our agentic AI. The most important part, though, however, is reinforcement learning, or RL, in the industry. Reinforcement learning is how the AI agents learn via trial and error. And that's where deep learning comes into play because it's going to understand that it can do things or it can't do things based on the guidance that you give it. Data processing happens within multimodal learning, which is using text and images and other forms of data to identify mathematical patterns. LLMs, the large language models, those are things that we've heard about. Those are repurposed within Agentic AI, and basically they use chain of thought reasoning to be the brains behind everything that occurs. And Agentic AI is proactive, whereas the other one is reactive. Some of the core differences, quickly. The first area is initiative and autonomy. Generative AI can respond to your prompts. It doesn't act unless you tell it to, whereas agentic AI can operate more independently. Once given a goal, it can initiate tasks, monitor progress, and even replan if it needs to. The second area is memory and planning. Generative AI generally has limited memory. Some newer tools might have session-based memory, but that's really the extent of it. Agentic AI has to have much more persistent memory because it tracks progress and it records the actions and plans future steps. The third area is tool use and environmental interaction. So generative AI produces outputs, but it doesn't interact with any other systems unless it's been integrated. Agentic AI is built to use other tools, so APIs, web browsers, databases, you name it. It interacts with digital environments to complete a task as well. Now, the fourth area is risk and responsibility, and this is important, obviously. Both forms of AI present low operational risk because you can control the outputs based on the input. Agentic AI must be trained to achieve the overall outcome that you want. This includes step-by-step process management, workflow automation. Something to be mindful of is that as we go and as we progress, future regulations in the NCUA need to be taken into account whenever it comes to responsibility. You can train the AI just like a new hire. So, it can maintain confidentiality. It needs to pass QA tests just like a live agent would. And let's note that the NCUA they're pro-innovation, meaning they're not discouraging the use of AI. They just want the responsible use of AI. They want it to be supervised, basically. So what that means is that the supervised version of AI can only release certain pieces of information. And that's how you train it, basically. Now, finally, for credit unions, when it comes to making the choice of using agentic AI, it affects loan production, applicant engagement, security, operational control. These are things that we obsess over here at Algebrik, but for individuals, it shapes the way that we work and live. It can do the work for us. Basically, you can delegate tasks entirely. Think of a work day where you can free up 40% of your time because you're no longer just pressing arbitrary buttons. And I mean, 40% of a work week is 2 entire days. So imagine going from a 5-day work week to a 3-day work week. I'll sign up for that. It's possible to hire or to harness both of these powers at once. They're not mutually exclusive. In fact, the most powerful AI systems do use both. If you apply this to the credit union movement, then we can achieve a level of efficiency that we haven't yet seen. At Algebrik, we use the generative AI within our point of sale module. That can be deployed to your member base, or it can be used in branch by originators. This is handy for eliminating loan application abandonment and even new hire knowledge transfer.
Hey, Jesse, I wondered if we could maybe do a second poll here. Would that be okay?
Absolutely, we can.
Yeah.
I was about to finish everything up, but yes, we can do a second poll.
Yeah.
So let's do that. Let's do our second poll here. What will be our question when it comes to our second poll? While that's coming up, I would just like to, oh, here we go.
There we go.
Oh, this is a good one. So what's the biggest challenge your institution faces when adopting AI for lending? And these are going to be some risk that we see throughout the industry, I would say. So lack of AI expertise, data silos, budgets, integration complexity, all of these things. I'm interested to see how this is going to shape out. And to finish everything, our business rules engine, it uses agentic AI to execute multi-layered decision strategies. Image processing is good whenever it comes to the driver's licenses that we have, but imagine like an auto loan where you don't actually have to process the auto loan. It can result in a beautiful display of efficiency. So we can use the agentic AI to not have to press buttons, to not have to arbitrarily move through workflows, which I think is really the most important thing. Because at the end of the day, we need to save our time to give that member service.
That's interesting
All right,
if you look at the
so
responses here.
50% is, just a lack of overall
Mhm.
expertise, which is not uncommon. I mean, in the
Yeah,
entire
and that's
industry, that
fair.
is,
It's completely fair because just even before I started
I
here, I
agree.
didn't know the difference between the two either. So I think it's that 50% is
Me
not
neither.
surprising at all to me.
No, it doesn't. And same for me. The other one that I see here is budget constraint and unclear ROI. That also makes sense just because of the unknown factor. Um,
And Jesse, you touched on that compliance and regulatory. It seems like there's still a large percentage in there where there's some concern over that. And I think Jesse had
mhm.
talked to that the NCI does actually want you to use it as long as you use it the right way.
Yeah.
So there's some guidance from NCUA on that as well.
Yeah, and the supervised nature of the UI is extremely important because that way it's not just releasing information, right? Because you tell the system what it can and can't do, basically just like a call center rep. So
Yeah.
um,
The one thing
I
I want
think
to
if we
encourage, we're gonna, sorry, go ahead, Jesse.
I was just gonna say I think if we think of AI taking on the persona of our credit union, then I think that that's a really good way to go, at least in terms of the overall adoption of it. And what were you saying? Sorry.
Yeah, no, that was great. I was just gonna say we were gonna move on to the fireside chat, but I just want to throw out there, if
Yep.
there's any questions you guys have during the next 45 minutes, please put them in the chat. We will have some time for Q&A at the end. We may not be able to get to all of them, but I encourage everyone that's on the webinar today to add any questions in there.
Yes. Alrighty, so now we are going to make use of our esteemed panel of credit union execs that we have in attendance. So, again, we've got Travis Bow, CEO of the University of Hawaii Credit Union. It's early for him, but don't feel too bad because he's located in Hawaii. We've got Sherri Woo, who's up in Michigan, University of Michigan Credit Union, and then Shirley Sin, who is the Community Development and Impact Chief Officer within the New Orleans Firefighters or Firemen's Credit Union, excuse me. So I would like to ask you guys some questions, if possible. And I'm going to start with Travis. And I think that this little slide that we're showing here is a good representation of the differences between agentic and generative AI. We also will be sending the slide deck out to everybody at the end, just so you can have it for your reference. But Travis, um, as a CEO leading an organization in the way that you are, from a lending operations lens, where do you see the most friction that agentic AI could realistically solve, say, within the next 6 months or so?
For our credit union, most of our friction through the loan application process actually occurs when there's a lot of manual underwriting that's required, based on credit or situational circumstances. So ideally, agentic AI would help us, to really make more complex decisions when loans require manual intervention. Typically in today's um, in our workflow today with very limited supervision. It doesn't matter if it's fraud based or if it's UDTI or any other type of um, uh, just the
Ratios.
fact that we constantly have to go back and forth with between we use generative AI today and maybe we get 60% done. There's another 30-40% that really requires a human intervention in today's world. So
Yeah.
really, agentic AI would hopefully just improve our efficiency, accuracy, and really member service by being able to finish those complex decisions without a human.
Yeah. I agree. And luckily, we've got Jen who loves decisioning. That's her bread and butter. But, whenever it comes to the agentic AI, multi-layered decision strategy is extremely important because what you can do is let's say that it looks at an application through the traditional means of underwriting, right? So it's calculating debt to incomes, it's looking at a credit report, it's grabbing pay stubs. The agentic AI can sort of lead you down a different path of, well, maybe the traditional way doesn't work, so let's incorporate cash flow underwriting or consumer permission data to try to figure out maybe some missing pieces that we might have. So that does a really good job of moving you in a way to get to a final decision as opposed to just sitting sort of in a reviewed status.
And that's what I think is a game changer when it comes to this platform is is it actually is smart enough to make those decisions and know what to do next based on, what you tell it to do, what you want it to do. I think it's definitely gonna. I always say that I would love to be an underwriter again, but the way that we're going, there's not going to be underwriters at some point. I think it's all going to be automation, which is great. It's going to allow you guys to grow your portfolio without hiring the underwriters, which are you typically pay a little bit more than the other staff. So I think it's a game changer.
I agree.
So
I
should we
think
ask Sherri
another
a
thing,
question now? Oh,
yeah, of course. And I was just going to add in, I think another good thing that AI does is that it does a great job of catching things that the human eye misses. So
Mhm.
there's little things that can come in from pay stubs and all those kind of things that it helps you with. So don't be scared of that, I assure you. All right. So Sherri, Miss CTO, what does a successful AI transformation look like for your credit union, but beyond cost reduction? So, maybe what are some of the other benefits that you guys would realize?
Yeah, thank you. So good afternoon, everybody. So yeah, good question. So first, in order to have a successful AI transformation adoption, we need to have the buy-in from the team members, not just from the top, across the department. So it's something we want the team members to see the value, um, knowing their maybe help with what they do daily basis or helping the members, right? So we get that buy-in. And then, so for example, for the member perspective, great thing is improve member experience. For example, at our credit union, we recently deployed the VIC. It's our AI chatbot, sit on our website and on our phone call tree. And the VIC will help him with members with common questions that free up the queue, and the agent can answer more complex questions. So that's one example of improve the member experience. So the wait time will be, ideally reduced. And also we involve the team members while we deploy this in the beginning. So we involve team member vote for a name. So VIC was born due to the team members involvement. So, and another example is we are starting doing, the data and AI really tied together. So we want to use the data to utilize AI to provide personalized services to our members. Anticipating need, not waiting, right? We as a credit union, we have a lot of data. So we using those data and apply with AI and give them something they may not even think about they need it. And so that is a great example of AI use cases to help a member. Another way is like account opening, right? So utilize some of the services that Jesse talked about, and then to reduce the time to open account, or in the loan origination, right? Automate some of the task, and so make the members be enjoyable way, quicker to have the loan approved. Um, so those are for the
Mm,
member perspective. For team members, to improve what they do, operational efficiency. One example is we are in the process implement a new ticketing system. So this system we're using AI technology where team members submit ticket. There will be a common questions answered, self-service to answer automatically, or the IT technicians using the tool able to solving some quick questions quickly, because search the database and then help you answer the questions. Also, we all know most of us are using ChatGPT, and different department all using ChatGPT, just as helping our daily things like compose the email. So in summary, and utilize AI in the credit union isn't to replace a team member or eliminate a team member. Instead,
mm,
we're cutting cost. Instead, it is a major transformation that benefits many areas.
fantastic. Jennifer, Sherri said everything that I was hoping to hear, honestly, because I mean, think about it. So, from the member perspective, you're getting operational efficiency on both sides, really, right, Sherri? I mean, you're getting it for the members and you're getting it for your internal
Mhm.
staff. Because I mean,
Mhm.
hey, like think how great it would be. I mean, back in my day, whenever we had to compose our emails, I mean, it would be super nice to have, something kind of co-pilot with emails, and then member experience increasing with your chat bot, giving them the ability to get questions answered immediately. I think that's everything that people are expecting nowadays, right? I mean, that's the digital experience that people are used to. Yep.
Exactly. So Shirley, I quickly want to move on. I love those answers, Shirley, but it makes me think of the next question for Shirley is how can agentic AI be used to close service gaps for the underserved or financially vulnerable members? Wondered if you could address that one.
Yes, I think that is a really good question. I think as we look and see how the demographics and cultures and so forth have shifted in the US, I think we pay more attention to how we can serve unique populations and communities. But unfortunately, when we think about that, sometimes we're still using legacy systems or old ways of doing things. And so when we really talk about closing those service gaps for the underserved or financially vulnerable, I think Agentic AI really has the potential to be that game changer if we deploy it intentionally. I think when we look historically, the access to affordable credit and financial services has been uneven. I mean, many members, especially those with like non-traditional credit profiles, for example, lower incomes or either even unstable housing fall through those cracks. And while it's not intentional, they're often penalized for not because they're high risk, but because the legacy systems weren't built to see their full financial story. And so even for a credit union like New Orleans Firemen's, I mean, we spend an enormous amount of time because we serve such a high percentage of our field of membership is underserved, low income, under-resourced populations. And a lot of times it takes that manual, traditional way of working with them. But unfortunately, by doing that, obviously, it sometimes lessens the ability for us to help more. And so this is really where I feel like as we continue to embrace and increase our usage of not just generative AI, but integrating the agentic AI, it's not just to analyze the data, but it's really to act on it in real time. One of the things that I think that's really important about the agentic AI is being able to take those next steps autonomously. Let's take like a gig worker. We're speaking a lot about the gig workers or our Uber or our Lyft drivers, in those realms. And when we look and see, how can we validate their employment for multiple income sources, that doesn't show up neatly on a W-2. So a lot of times we find if we use our traditional underwriting, a lot of times they're left out, or we may have to take more time with them. And sometimes they may not have the time. And so, really when we can also get an opportunity to like cross-check rent payment history or utility payments or cell phones, we can look at getting a more overall creditworthiness picture that might get left out again from just the traditional sources. But when we think about, like you were talking about, the permission data or using the alternative sources of data, this is also a way that can bring more of that real-time and autonomous decision-making into helping groups that unfortunately a lot of times are left out. Something else is that consistency that agentic AI really can help. When you think about having to do the manual underwriting, and a lot of people that are in these financial vulnerable populations, we tend to do the character-based lending. So again, it takes a lot of the hand-holding, understanding the story. And that honestly can sometimes be a tiring type of process. And so whether we realize it or not, sometimes we unconsciously judge a member by a neighborhood or an address, where they live, or even sometimes the spelling of a last name. So when governed properly, applying the agentic AI with the same logic to every application, it can actually help reduce the unintentional bias. But I also think one of the most important things about agentic AI is that it opens the door to proactive service. One of the things I think that we all want to do, but again, just finding the time and resources, especially in small to mid-sized credit unions, is how can we monitor financial hardship indicators like missed payments or reduced direct deposits and then trigger those early interventions. So like having payment flexibility programs or financial counseling outreach. So this really can move us from reactive support to preventative care, which is essential really in serving these at-risk populations. So, when we think about all of this, it really does require, though, a thoughtful design, and those workflows have to be built with inclusion in mind. So when we think about the data sources have to be broad and representative, and the systems have to be explainable and governable. But when done right, I think the Agentic AI doesn't just improve efficiency, it really extends the reach of our mission. So it really helps us meet members where they are on their own terms and ensure that no one is left behind. And so I think at the end of the day, when we're really trying to, especially when we're talking about the Gen Zs and the millennials, and when you think about the entire unbanked and underbanked population today, 60 to 65% of them fall in the Gen Z and millennial area. So again, if we're trying to bring them in to the credit union system, Agentic AI is going to be critical to meeting that need and that gap.
That's pretty amazing to think about that if 60% of underserved borrowers are millennials or Gen Zs, those are the ones that we as the industry need to target, right? Because we need to get younger as an industry, right? I think our average member is 53 or something, and the only way that we're going to get younger is targeting the Gen Zs and the millennials,
Exactly.
So that's
that's the
something.
generation that requires the automation. They require the quick, fast decisions. They're going to drop off if you have too much for them to answer. So there's like my kids, they want to do everything on their phone and have it done within minutes. So they're looking for that. So if we don't attract them using omnichannel ways, and we have the automation there, you're going to lose them to someone else, a bigger FI.
Yeah, and just real quickly, when we talk about and underbanked, the underbanked are really individuals that are using alternative financial service providers, and that really fits. So when we think about the fintechs that Gen Zs and millennials are going to, that's really the definition of underbanked, is not using mainstream financial institutions.
Yeah, and the top LOS platforms out there don't have the ability to get to that alternative data. And if they do, it's probably through a bureau at a cost. So just us having the access to all of those vendors to pull into that autonomous decision, that's what's going to make a difference for you capturing that percentage of your membership. Well, why don't we move on to another question? Let's go back to Travis. Travis, how do you differentiate between meaningful automation and buzzword tech when vendors pitch you AI-enabled solutions?
Well, really, we really have to get hands-on and require to see the technology at work. Multiple demonstrations with how the software determines what the solution will be given a set of parameters, and we want to monitor it how it responds to more and more complex situations, whether again, whether it's fraud, taking multiple sets of data from multiple databases or locations to help determine what the final outcome should be. That's really where does the software get stopped along the workflow process? That's where we've seen a lot of it today, where they stop, where it can't complete the loan process workflow. That's
So it's
for the
not
most part.
it's not doing everything that it's supposed to, is kind of what it sounds like, right? Yeah.
And a lot of time is spent today in fraud.
Okay. So those buzzwords, right, and all of those things, it seems like people do that to get in the door, right? They want to get in the door, they want to say, hey, we got all the AI, but then of course you're saying in real world situations, maybe it ends up kind of different based off of that. Okay. Sherri, I've got another question for you. How are you preparing your leadership and your board whenever it comes to deploying agentic systems? Like, what are you guys doing to wrap your head around everything, I guess? It sounds like you are already on the way, but I'd like to understand.
Yeah. Yeah, good question. So we started with senior leadership and the board planning and education, right? So first, like we just started this webinar to introduce the difference between the generative AI and the agentic AI, and then bring use cases which will benefit by using agentic AI, such as loan origination, compliance, due diligence. The agentic AI is still new to most people. We saw the the poll earlier, 50% even on this webinar only aware
Hmm.
of. So it is new. So it's lots of education. It's needed. Start with senior leadership and the board to understand why it's revolutionary. It is going to make a big difference, but we understand what it is first. And so great way to start is review the real world use cases and the failure scenarios to illustrate both the opportunities and the risk. And this is definitely a general AI is not a one department work. It's need to be collaboration between many departments, such as legal, compliance, risk, and IT, to develop AI specific governance process, policies. So due to the powerful decision making capability of agentic AI, right? We know how powerful it is, but also the risk will be higher due to the complexity and the um, unknown, right? So it is critical to create a clear framework, um, which is some of the differences. Like one is called a human in the loop versus a human on the loop versus a fully autonomous
Mm.
use cases. So there are three differences. We have to look at the different based upon use case, which one we should apply for the particular framework. Also, it is the best practice to establish AI oversight committee or subcommittee in the credit union. We haven't started official start on that yet, but that's something be good to do. And so all the policies and the vendor due diligence need including additional AI evaluation and the risk assessment. And we know NCUA start looking at more closely, right? When they come in to exam about the due diligence if you realize you have AI vendor involved. Um, so last one, not the least, is align your agentic AI to the core value and the mission statement to your credit union. Like for us, it's better serve our members and the community. Right, so don't lose the fundamental of that. Whenever because what Shirley talked about earlier, right? We want to be equal decision making. So how to apply the using the technology to enable that and make sure we have a member committee in mind that's the forefront of everything we do.
Oops. I find that to be a very thorough approach.
Yeah.
I think having committees is good, right? And you need to understand how it affects your members, what they are perceiving it as, because you need to make any appropriate changes at that point, right? So yeah, that's fantastic. All right, so I think that we
Yeah,
have another poll that
I
we
think
want to put
Jesse, we're gonna
up.
move on. Yeah, we're gonna do our one more poll and then we're gonna ask, I think, Shirley, one more question before we get to the Q&As. We will address some of the questions in there, but there's gonna be too many to address, so we'll definitely get answers out after the webinar, but we'll address a couple of them.
Yeah. Right, so let's get the poll up. If AI could remove one or more major bottlenecks from lending overnight, which one would you choose? I'm going to be interested to see what the answers are for this. Member onboarding and application intake, doc collection, employment verification. This actually segues us into the Q&A pretty well for a question that was out there. So I'll be
Yeah,
interested to
this is
see.
perfect because this will cover some of those questions that were asked. Specific
Yeah.
to like efficiency and where you're seeing it making the most impact.
Yeah. I know for me, just me personally as a former loan officer, it's 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 those things that take up all of your time, right? So like document collection, that takes a lot of time. Employment verification, that takes a lot of time, right? So, I loan closing and disbursement. I mean, those are things that the agentic AI can literally dictate the way that it works based off of your training. So
Yeah, same with
it's cool the way it
underwriting
goes.
and touch points.
Yeah.
How many people need to touch an application to get from start to finish too? It's going to alleviate some of that as well.
Yeah. And look at this. Okay, so if it could remove
So
bottlenecks,
fraud and identity looks like to be the
fraud,
top one.
fraud, documents,
Compliance, regulatory.
decisioning, employment. Yeah. Wow. That's pretty broad. And to me, it's kind of like saying, hey, I want it to remove all the bottlenecks. That's kind of what this is because
Yeah.
it's pretty evenly distributed, right? Like everybody's wanting something. So that's cool. All right, fantastic.
And even
Some
the
good
pricing
information.
and offer selection seemed pretty low on that one, but I see that there's opportunity to improve that versus what you guys are doing today within your LOS. There's ways that that can all be automated as well based on certain buy boxes, certain offers based on
Right.
the member qualifications. So there's a lot more. I just don't think people are looking at it like that right now, but all of these definitely would impact.
Yeah.
That's great.
Okay. So
So
Shirley,
let's move on to, I'm gonna ask
last,
one more question. Yep, I'm gonna ask
yep,
Shirley one more question if we're good on that one, and then we can move on to the QA. So the question I had, Shirley, is when you think of trust building in your community, what must Agentic AI not do in order to maintain that trust? I think that's a good question.
That's
good
a
question.
very good question. When you think about how our country's demographics, the dynamics and culture are changing, and just kind of even this statistic, when you think by the year 2050, we will be a majority minority country. And when you think what that means,
That's a good
the
point.
bottom line is trust. I mean, trust is hard won, it's easily lost, and especially in the financial services area. And even in more so in those communities that I was mentioning that have historically been like overlooked or underserved or unfortunately treated unfairly when it comes to our traditional systems. But kind of the question there in reverse, it's like what must it not do? Agentic
Mm,
AI cannot be a black box. Like when a member applies for a loan or gets denied or is asking or we're asking for additional documents, they need to they deserve to understand why. And I think a lot of times we use the automation sometimes just to provide that very easy for us, yes or no. But in this case, when the agentic system made that call, we need to be able to explain it in plain language, not just to our compliance officers or loan officers, but to the member on the other end of that transaction. Because if not, and we don't have that transparency, we're going to lose the trust. And so what's the point in investing in the systems if we lose the trust and we lose the members? So, we have to think about it, especially when we're working with financially vulnerable populations, that their members aren't just applying for money, they're putting their dignity and their financial hopes in our hands. And I think they have a right to that clarity. Another thing to think about on the agentic systems is they should not reinforce historic inequities. We know that in past lending decisions, and we have the data to back this up, that those have sometimes been shaped by systemic biases, whether through geography or income patterns, or sometimes just outright discrimination. And if we feed that data into a system without scrutiny, we risk automating those same patterns. So that's not innovation, that's institutionalizing inequity. So we must put in place rigorous fairness audits, diverse test scenarios, and intentionally biased checks at every stage. So, I know one credit union that I was talking to, they actually oversample addresses that are in traditionally low income areas or investment areas to see how their system is producing approval rates or how they're going about that system. So, it's not enough just for our model to perform well. We have to ask, what is that? Who is that model performing for? So I think, at the end of the day, when we
mm,
think about what it shouldn't do, somebody else was mentioning that we can't remove the human touch from what we do, because I think as credit unions, our motto is people helping people. It's not machines helping people. So I think we use the AI to help us make better decisions and help those decisions so that we can help more people. But at the end of the day, I don't think that we can replace what we do by taking empathy out of that. So while, again, the automation can streamline those transactions, we cannot eliminate those relationships. And I really think that, combining the generative and the agentic AI can honestly give us the opportunity to spend more time with individuals and households that need that empathetic, that need that character-based lending, that maybe the AI isn't always the solution. And I think lastly,
I agree with that.
Yeah, it's the
No, I was just agreeing
accountability.
with you, Shirley.
Yeah, well, we cannot act without accountability. So sometimes systems go wrong. There may be a false denial or a data mismatch or a delayed disbursement. And so members need a clear path to that recourse. So again, we can use the agentic AI to really help us in our processes and helping more people. But I think at the end of the day, there's still some things that need a human touch in this whole process that I think will continue to set credit unions apart in what we do in serving low income and vulnerable populations.
You are 100% right that we should not lose our humanity, right?
Yeah.
I agree with that 100%, even though the machines are coming in.
Yeah, I think for those of you that may have been watching the Discovery Conference, the gentleman from OpenAI was even bringing that up about how we re-engage even our younger generations on how to keep that human touch and contact in what we do.
Perfect. Well, thank you. That's fantastic. We even had some folks kind of clapping while you were doing that. So there you go. So that's good. Good. Great answer. All right, so we are coming up. We got about 12 minutes left, so we're going to get into some QA, and then we're going to end with a little thing that we want to show you guys, which is our virtual loan officer. So as we're looking here in the Q&A, we got some good questions. The one that I like
the one
the most.
I like the one around efficiency, Jesse. If we could maybe address that one really fast. There was someone that asked about. It's for those using agentic AI model completely. What has been the reduction in headcount and how has efficiency been? Is it one person monitoring the entire system? And honestly, I think it depends on what your process is today. Not every credit union has the exact same process, but the way I like to look at it is if you could automate more parts of that origination cycle to funding, would that free up your staff to, as Shirley said, deepen the relationship within the conversation so they're not so task oriented and they're having more meaningful conversations with them. And it could even mean to where you can scale your portfolio without having to add additional FTE, or maybe you reallocate some of that FTE to other areas that are needed within the organization. I don't know that we can measure it like one-to-one. It just depends on the credit union. Jesse, I don't know if you have anything to add on to that, or any of our panelists either.
You answered it. You answered that perfectly. I don't really have anything else to add. Yeah,
I mean, no
that
one
was
wants to
great.
get rid of staff, but at the end of the day, could you continue scaling your credit union without adding more people and just, like instead of underwriters, maybe they become, funders because they're funding more loans. I'm not sure, but it just might look different, and it just depends on what you're trying to get to when it comes to efficiency ratios. But we can help you get wherever you want to be.
Yeah, and I'm curious about one of these from Kevin L. It says, how is agentic AI, or how is it going to change work for all of us, and is it going to alleviate member experience for our beloved members? Yes. So when it comes to agentic AI, the workflows that we have from the member-facing portion can prompt them down a certain path of application that might be different from another applicant based on that applicant. So for example, if they have a high credit score and many paid off loans, the AI can recognize that, and maybe you bypass asking for a pay stub, for example. On the loan officer side, I mean, the gains that you get are really quite incredible, because you can tie in things like trade line manipulation, payment calculations, disbursements. You can even do funding. You can send electronic documents. So the workflows can become as automated as you want them to. So basically, you can kind of take all of the clicks out of your users' hands. And then there was another one that I'm curious as to what Travis, Shirley, and Sherri might think, but it was by Dan. And he asked, when using alternative data, such as phone payments, have regulators provided an opinion if you use it for one or to use it for all, basically. So do you guys have y'all heard anything about that? Where if we're using alternative data that we should use it for every applicant? I mean, I don't know of any regulations that say that you can't, but
No, but I think maybe in the case of some of the credit unions I've worked with in the past, it's getting whatever we can use to get a complete picture of what the lending profile of that particular borrower may be. And I think we have a bunch of tools in our toolbox, and I think that that should be our baseline, and being able to use the tools that will best help us get that borrower over the finish line. And I think that was the whole reason of using alternative data in the first place, was that we had many people, like, let's take single mothers, for example, that, may be moving from, especially if they're domestic violence survivors, maybe moving from address to address. And in some cases, if we used traditional underwriting in the past, going from job to job may be a detriment, or moving from address to address may be a detriment. But if we start
mm,
looking at how we can find other ways to understand their story, I think that, like I said, having these tools available and knowing which tools to use at what time, I think is a positive thing. And so I think if we're looking at it from the standpoint of the examiners, I think, again, it's how do we most safely underwrite a loan to ensure that, there's mitigation of risk for defaults and charge-offs, and also balancing that with how do we help the member.
perfect. Yeah. Um, I would say to use the alternative data as much as possible, just because it's going to give so much more of a picture, I would say, in my opinion. All right, so what we're going to do here is I'm going to share my screen real quick. So I'm going to pull this. I'm going to share. Y'all are going to see my AI loan officer here in a sec. So this is going to be a little demonstration that we're going to give you guys. So this is something that can happen here within Algebrik. So basically, imagine a world where there's an online application tool where somebody can talk with that person. So let's go ahead and get this started here. And you guys should be able to hear everything as I move along. So let's go.
Hey there. I am Jarvis, your personal loan concierge from AB Credit Union. May I know who am I speaking to?
Jesse Fruget.
Hello, Jesse. I am Jarvis, your personal loan guide for AB Credit Union. I'm here to help you explore loan options quickly and securely. What can I help you with today?
Jesse, we are not able to hear you actually.
Oh, really?
Yeah,
Okay.
not the voice agent. Yeah,
Not able to hear the voice agent?
no.
Okay.
Uh,
Okay, because I was
yeah, if you're
able to
sharing
share
your
my
screen,
screen
you
just
can.
now.
Yeah, you haven't shared your.
Well, I did. I thought that I did. It says that I've got this share sound on. I had it to where it could share the sound. I'm gonna start
Hey
again.
there. I am Jarvis, your personal loan concierge.
Could y'all hear it
We could.
just now when it was talking? Okay.
Yes.
Okay. All right.
Hey there. I am Jarvis, your personal loan concierge from AB Credit Union. May I know who am I speaking to?
Jesse Fruget.
Hello, Jesse. Nice to meet you. I am Jarvis, your personal loan guide for AB Credit Union. I am here to help you explore loan options quickly and securely. What can I help you with today?
I would like to apply for a personal loan.
Great. To find the right loan fit, do you have something specific in mind? We offer Signature, which is unsecured, line of credit, certificate secured, and share secured. Would you like a quick breakdown of each, or do you already know which suits you best?
No, I think I know. I'm gonna go with the signature loan.
Got it. How much are you looking to borrow? We offer personal loans between $2,500 and $15,000.
15,000, please.
Okay, and how long would you prefer to repay? Anywhere from 12 to 96 months.
Hmm. Uh, 5 years.
Okay, and what's the loan for? This helps tailor the best option for you. Are we talking debt payoff, consolidation, home needs, moving, or something else?
We're gonna go on vacation. We need a break.
Understood. Just to check eligibility, are you a United States citizen, green card holder, or here on a visa? Your data stays fully protected under financial laws.
I'm a U.S. citizen.
Thanks. Could you please provide your social security number? It helps us verify your identity and process your application securely.
Yeah, it's 123456789.
Thanks. And do you rent or own your home? If renting, what's the monthly rent?
I do rent. It's 2,000 per month.
Would you like to add a co-borrower? It's optional, but sometimes helpful for qualification or better rates.
No, thanks.
To get a quick eligibility estimate, I'll need your okay for a soft credit inquiry. This won't impact your score. May I go ahead?
Yes, please.
Great news. You're preliminarily approved for a personal loan from AB Credit Union. Next, you'll get an
Fantastic.
email from us with full details, loan amount, estimated annual percentage rate, repayment schedule, and disclosures, all clearly outlined as required by federal law. Final approval will depend on a few final checks, but you're off to a strong start. Any questions before we wrap up?
No, thanks.
Thanks for choosing AB Credit Union. Looking forward to helping you again. Have a great day.
The statistical data is right here. Okay, perfect. So this is what we'll see here. So as you can see via a webhook, what's happening here is that the information is being received by the AI agent. It is taking that information, it's thinking, and it's parsing it into the correct places where it needs to be in order for us to get to a decision. And then it's able to bring that back. So with this, through the webhooks, it was able to take everything that we had, put it into the appropriate fields, send it to the decision engine, which the decision engine was then able to make the decision, and then we were able to come back and let the applicant know. So this is an example of how agentic AI can basically piece together a step-by-step process. In this case, we're using voice command to receive the data, but obviously it could be received in other ways as well. So this is the future. As we move along in this 21st century, stuff like this is just going to continue. I think, if anything, it's going to make our members happier. It's going to make us appear much more modern, and it's going to give us that look and feel that we're looking for, and we're going to get back to that dominance that we had as an industry. So we're right at time. I would like to thank everybody for attending our webinar. We are going to be sending out the slide deck to you. Also, we're going to be sending a survey once we're done with everything. So please fill out that survey. Let us know how you liked our webinar. But other than that, we'll see you next quarter. So everybody have a wonderful day.
Yeah, thanks everyone.